want to study how to trade a ranging market, right? Now, the first thing is you identifying a ranging market, all right? So, now, like I said, you want to be certain of the trend of the market, the kind of market you want to trade, all right? Before you now decide, okay, how you want to trade it, right? So, let me start by saying, please mute your mic. Mute your mic, please. Mute your mic. Kindly mute your mic. Okay, so this is a trending market, right? If you look closely, this is what trending market right there, right? So this is not ranging. This is giving you a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. So this is a trending market, right? Now compared to this, now look at what happened here. You can mark out this zone. Let's use this. Okay. Now look at this. If you look at this closely, this is different. This is different from this, right? This is giving you a trend. If you look closely, this is giving you a trend, right? Higher highs, higher highs, higher highs, and higher highs. But this place is like market is just moving horizontally, so you can't even tell the direction of the trend, right? A ranging market is a market whereby the market is not going up or coming down. Buyers and sellers are in struggle for power. So market is not buying and not selling. But ranging market will not continue forever, obviously, right? So that takes us to how do we trade a ranging market? Huh? How do we trade a ranging market? And like I said, there are four different ways to trade a ranging market. All right, four ways to trade a ranging market. The first thing is that you mark out your support and resistance level zones in the ranging market. All right, so you are marking out the ranging zone inside the market. All right, just like the way you used to mark your normal support level in a trending market, in a trending market, right? The same way you mark out your support level and your resistance level in a ranging market as well. Do you get that? So now, having said that, the first way to trade this is to enter at the support level. You buy at the support level and you target the resistance level as your take profit. Same thing, you sell at the resistance level and you target the support level as your take profit. So you are selling from this point. When market comes back to your ranging, to your resistance level, you sell from this point again. Sell from this point again, and you follow that sequence. Same thing, you buy from this zone, buy from here again and again. Do you understand? Do you understand that? So it's very straightforward, right? So it's like you're buying, you're doing the pinball, just like you're following what market is doing. You buy up to this point, then you sell again, you buy again, you sell, you buy, you sell, right? Until then we now see the breakout, right? So that is the first way to trade a ranging market. All right, that's the first way to trade a ranging market. Now, secondly, um, you are waiting for a rejection from the zone. Sorry, a pull out, a breakout from the zone. Now, you know what? Many traders used to run from this ranging market, right? Because it is very complicated, very, very complicated and confusing. Look at this now. Market did not even touch this resistance level thoroughly. If you had waited for market to come and give you a double top here or a double bottom here, maybe you would have missed it. But like I said, you mark out the whole zone, then you enter from there, right? Now, it might be very confusing at times, whereby, okay, look at this one now. At this point, you will have wanted to sell here. Then you just had this breakout, right? Many traders would have, obviously sold from here like this, and your stop loss above this resistance level, right? Right? And then what happens? Market takes out your resistance, your stop loss, and you're in loss. That means the ranging period is over, right? When my ranging market will not continue forever, a new trend will always emerge, right? So now the first thing you do is that, okay, you enter at the resistance level and sell at, and this, you sell at the resistance level and buy at the support level, right? Now that is very correct. Now, the second way to trade the ranging market is to wait for a breakout. When market breaks above the zone or below the ranging zone for a sell, all right? When the ranging period is over, when the ranging period is over, then you want to enter the market then. Now, so it's like you're setting a buy stop here, like this, all right? So you are targeting the next support level after you have analyzed the market, obviously. All right. I'm not going to go into that because we just want to focus on ranging market for now. Let's say this is the next support level that you can see in the market. So you buy from here and you target this next support level. Do you understand? So you are setting a kind of buy stop here. So once it breaks above this zone, this last resistance level, then you just continue to buy with the market. Do you get that? That is the second way. You are waiting for the breakout. And once market breaks out of the zone, you join the new trend. Do you get it? Do you get that? So, and as you can see, once market break out of the zone, you see what? Market continues buying, right? A new trend started. All right. So once it broke out of this zone, then market continued buying. Do you understand that? So many traders also prefer the second option, you know, because they don't want to be trapped in the ranging market. So they just want to wait for the ranging period to be over. All right. Then they join the new trend. That is the second way to trade a ranging market. Now the third way is to wait for a pullback after the escape from the ranging market. After a ranging period is over, market will always pull back into the zone. You know, when a resistance level is taken out, it turns to a support level. I believe you know that. And when a support level is taken out, it turns to a resistance level. So this resistance level has been taken out. This one here, which formed our boundary for the resistance level. Don't forget, we drew out this zone initially. Don't forget that, right? So market will pull back into this zone. We call it a pullback. Why? Because it has started a new trend. It broke above the resistance level. Now that means the ranging period is over, right? Then it will retest the new support level before it continues buying. So this time around, you want to be sure the ranging period is over. Then you are entering after the retest. Do you understand? So this will be your last, this is the support level right here. So let's say you're using this level, right? And then you want to enter your buy, and then you join the new trend after the pullback. Do you understand? So this time around, you want to be safe of the market. You don't just want to rush. You don't just want to trade like, no. So you want to be certain. You want to be sure. And as you can see, once market retested the last support level, it continued buying, right? So you want to join the new trend. I would buy from here, I will target the last high, and then you will see that's a boom, right? CP done. Do you get that? That's the second way. When the ranging period is over, market would retest the ranging zone, the last support level. It was previously a resistance level, market broke above it, retested the zone. Now you have a new trend right here that started from here, right? And then it retested it. Now the new trend has emerged and you start buying. Do you get that? Do you get that? So that is the third way to trade a ranging market. On a recap, the first one is, okay, you want to sell from resistance level and buy from the support level, right? The second one is you want to wait for the breakout and then you join the breakout. Once it spikes above it, it breaks the zone. You understand? Then you want to enter for a sell, for a buy, either of the two. Then the third one is that you wait for a pullback into the zone. Once market pulls back, you now join the new trend. That is another way to trade this market. All right. Now that means that you are away from the ranging market. You are now moving yourself into the new trend. So you are one of the early buyers, right? Let's say you want to swing this one now. Let's say at this point you take partial profit and you continue your buy. You can buy as high as this new zone right here. Do you get that? So that is which is the best. Trading after the pullback is the best way to trade the ranging market because you are certain and you are sure that a new has started. So you are safe. You are playing safe of the market. You don't just want to enter the trend blindly. Do you get that? You don't just want to enter the trend blindly. You don't just want to rush into the market. All right. So now, lastly, the last way to trade and the fourth way to trade a ranging market is to run from it. All right, to run from it because ranging market might be so complicated, so complicated, whereby you think the ranging period is over, but instead it just overshot and then it will still continue its ranging market, its ranging zone. It happens like that. It happens like that. That is why most traders will tell you that you should not trade a ranging market. Instead, just run from it. It happens like that. Do you get? Let's look at an example. Let's look at an example here. Look at this. This was a ranging market right here, right? We didn't have a trend, right? We didn't have a trend right here. We didn't have a trend right here. And you could see that, yes, indeed, it's a ranging market. Many traders would have wanted to sell from here. You would have wanted to sell from this zone, right? From here, when market approached, let's say you use the first method I explained above. Now, you want to sell from this zone, right? So you entered when market came into the resistance level, right? Now look at it. You put your sell just slightly about 10-15 pips above this resistance level, and then boom, market breaks above your stop loss. Instead of it to just follow the trend, it just did what? Boom, you continued back, right? You would have expected that okay, it has broken above my zone, then you just want to okay, maybe you want to revenge the market for some traders who make mistakes. Now, instead of you to have just accepted the fact that it was a loss, maybe you followed the second method, right? You just bought from this zone after it broke above it, and you are targeting this new support level, right? Maybe you target as far as here, right? Then boom, market just gave you a few pips and then it came back again, took out your stop loss. Do you see that? Now you are losing the second time again, and this time around you are worried. Okay, what went wrong now? This thing has broken above it. Instead of it to now continue in neutral, you see that it continued. It just extended the ranging zone and it continued selling. It continued the range. Do you get that? You see that it just went overshot and now continued the ranging market. Do you get? But instead of you to have done the first two, the best thing is the last two. Either you wait for a pullback into the zone, right? When you are sure that it has taken out of of the ranging market. You are sure that the ranging period is now over, right? You wait for retest of the zone, which is the pullback, then you join the new trend. Does that make sense? Or you just don't trade the ranging market at all, which is, should I say, maybe the second best or maybe even the best instead. Because you just wait for a new trend to emerge and then you just enter into a pullback, which I explained earlier. So you are not trapped in the ranging. You are not entering and market breaks above your stop loss or below your stop loss. And you are not also waiting for a breakout whereby you now join and then everything went wrong again. Do you get that? Do you get that? So those are the four ways to trade a market. Any questions?